Hello everyone, this is Onebot 10. In this video, I will explain how to use Onebot score, and this video is going to cover the most basic manual. First, if you look at the Onebot score chart, there are blue and red lines displayed together. Here, the blue line is the Onebot chart that connects the scores provided by Onebot. And the red line represents the actual crypto market price, which is imported from Binance. Since the price chart is the line graph that connects the instantaneous prices on hourly basis for comparison with score charts, it may look a little different from the actual price chart that is available on Binance. In some cases, the Onebot chart and the market price are closely attached together, like this example, but it is not recommended to enter a position referring to these kinds of charts because it's really hard to predict the direction of future market price. But do not worry, there are various types of charts that you can infer signals. The signals may infer a trend reversal or prediction of price rise or fall. As you can see on the screen, it is classified into several signals, and we recommend that you continue to learn until you fully understand all of these signals. So let's start by explaining the signals and their examples according to the following table of contents. So let's get started. Okay, let's start with cross signals. A cross signal literally means a signal in which the price and the Onebot chart moves in opposite directions. As you can see on the screen, the score has increased at the current time compared to an hour ago, while the price has decreased at current time compared to an hour ago. So this is called bullish cross, and it implies that the price will go up because the Onebot chart is above the price line. To give you a little tip here, it is a more reliable cross signal when the current score sharply increases by more than 20 or 30 points in an hour. One thing to note here is that we define cross signals even when the score and price line moves in different directions without actual crossover. So usually when these cross signals occur, 70% of the time, the market price will follow the Onebot chart after a few hours. But there is a 30% chance where the Onebot chart following the market price. So to summarize, after the cross signal, the market price follows the Onebot chart in about 70% of the time. But please be aware, Onebot charts may follow the market price, and that could happen with 30% probability. Therefore, we recommend you to wait for a couple of hours rather than entering a position immediately after the cross has occurred. Same concept applies to bearish cross signal, where the Onebot chart goes down while the price goes up. The reason why we recommend you to observe is not just because you have a 30% chance of losing money. In the case of the chart on the left side, the market price reacted immediately and caught up with the Onebot chart. So if you enter right away, you can make enough profits. Of course, aggressive investors can enter immediately after cross signal occurs, but we recommend that you enter with an amount of about 10 to 30% of your cash portfolio and lower the average price by investing in installments when the market price goes down further. Ultimately, there is no right answer, so it is better to keep studying on your own to find an investment method that suits you. So let me show you an example of cross signal. In the middle mark part, the score rose and the market price fell, resulting in a bullish cross. That is a strong buy or long signal. If you enter after observing the chart a few more hours, you can enter at a price close to the bottom. But if you enter immediately after the signal is issued, enter with about 10 to 30% of your cash portfolio and additionally buy in instruments to lower the average buy price and minimize the loss. When the gap between the score and the market price has decreased, you may sell or close the position. Then you can get enough profit. In this case, the price is rising and the score is falling. This is an example of a bearish cross, and you can infer that this is a sell or short signal. If you enter the position immediately or after a while, you can enter at a price pretty close to the high. Even if you entered at a price lower than the high, you can increase the average sell price and minimize the loss through investing in instruments. Moving on to the next, I will explain the divergence signal. A divergence signal is a signal when the Onebot chart and the market price move in the same direction, but the slope of the score is steeper than that of price line, resulting in divergence. As you can see on the screen, the score has risen with higher slope, and it indicates that the price will move upwards. When divergence occurs, the probability that the price will follow the Onebot chart is usually higher, and Onebot charts are less likely to follow the price. To summarize, when there is a divergence, the market price follows the Onebot chart with a high probability, but please be aware of the case where the Onebot chart follows the market price. Same concept can be applied to the bearish divergence. Also, keep in mind that the divergence signal indicates weak signal compared to the cross signal in terms of accuracy. Let me introduce some examples of divergence. First, the score went up a lot, while the price rose only a bit. This can be inferred as bullish divergence, which is a buy signal. Therefore, you could wait to enter the position at a price close to the bottom. Otherwise, lower the average buy price by investing in instruments. You can get sufficient profit by selling or closing the positions when the two lines start to converge on the right-hand side. Let's take a look at the case of bearish divergence. First, the market price fell slightly, but the score dropped very significantly, which can be interpreted as a sell or short signal. Again, you could wait to enter the position at a price close to the high. Otherwise, increase the average sell price by investing in instruments. You can make a profit by buying or closing the position when the two lines start to converge together. Next, I will explain the score change signal. The score change is a concept similar to divergence. If the score hasn't changed much, but the market price rises drastically, the price will fall back to Onebot chart. In contrast, if the score has not changed that much, while the price has fallen drastically, the price will recover to Onebot chart. In the end, there is a high probability that the price will follow the Onebot chart. As you can see above, the cross signal indicates the strongest signal followed by divergence, and then score change. We recommend you to use the score change as a reference when you want to hold or exit the position. I will summarize the signals we mentioned in this video. First, bullish cross occurred between 10 and 11 o'clock. Scores went up, prices went down. This is a buy or long signal. After waiting for an hour, the market price rose a bit, but the score is still above the price line. Since this is also a signal that the price is expected to rise, it can be viewed as a buy or long signal. After an hour, the decrease in market price is larger than the decrease in the Onebot score. From the score change perspective, it can be predicted that the market price is highly likely to move toward the Onebot chart. After 3 hours, the Onebot chart maintains a nearly similar score, and the price is rising again. After 4 hours, you can see that the exit signal has occurred as these two lines converge together. To summarize, first, a cross has occurred. We decided to observe and the bullish divergence widened even more. and the Onebot chart remained the same, but the market price fell further. If you sell or close your position, you can get enough profit. Also, even if you entered immediately when the cross occurred, you can lower average price by additionally entering positions at lower prices. You will be able to take sufficient profit when the exit signal is issued. It is important to note that the price and Onebot chart may not move in the same direction, just like this example. So please study the manual thoroughly by looking at various examples. Next, I will explain the score, which is higher than 250 and lower than negative 250, and score of 6.4 signal. These signals are very important because these signals indicate a reversal of a trend. First, the score of plus 250 is a score close to maximum score in Onebot AI algorithm, which is a signal that is approaching a swing high. However, it is not recommended to trade solely based on this signal because it is difficult to accurately determine at what price to enter a position. Because 250 is a high score, it is sometimes misunderstood as an opportunity to buy. But if you look at the other side of the coin, it may be a sell opportunity. Again, a score of negative 250 is a score that is close to a minimum score in the Onebot AI algorithm, which is a signal that is approaching its swing low. However, it is not recommended to trade solely based on the score because it is difficult to accurately determine at what price to enter a position. Negative 250 is a low score, so it is sometimes misunderstood as a sell opportunity. But you better think of it as a buy signal. This is an example of a swing high with plus 250. This is how Bitcoin peaked on February 10th and 11th when Onebot chart recorded 233 points and 277 points respectively. Rather than the 250 points mentioned earlier, the strongest signal that informs the reversal trend is 6.4. A score of 6.4 is a special score very unique to Onebot, which only comes out when market forces suddenly went out of the market. In other words, if a 6.4 occurs during uptrend, it is a signal that the force is no longer trying to raise the price, and if a 6.4 occurs during downward trend, it is a signal that the force is no longer trying to bring the price down. First, let's take a look at the 6.4 during the uptrend. If the price is moving up and you get a score of 6.4, this is a signal that you are approaching a swing high, and this is a sell opportunity. Next, let's take a look at the 6.4 during the downtrend when the price was falling. If the price is falling and the score is 6.4, this is a signal that you are approaching a swing low, and which is a buy opportunity. 6.4 is easier to understand if you look at an example. This is a case of 6.4 during the uptrend where the price is rising. First, 6.4 has occurred while the price is rising, and at the same time the bearish cross occurred simultaneously. After about 4 to 5 hours, the market price reached its peak, followed by a decline in the market price. Similarly, after the 6.4 signal occurs, there is a way to either enter from the highest price as possible through observation, or to increase the average sell price by immediately entering the position and selling at higher prices afterwards. This is a case of 6.4 during downtrend. First, there was an upward crossover right over here, and 6.4 occurred while the price was falling. In this case, a trough occurred with 6.4 signal, and the price continued to rise afterwards. Similarly, after spotting the 6.4 signal, you can wait to enter at lowest price possible, or enter immediately, and you could lower the average buy price through additional purchases afterwards. So we have looked at the most basic manuals of Onebot score. Sometimes the market reacts immediately after the Onebot chart signals occur, but sometimes it takes hours or even days for the price to follow the Onebot chart. Therefore, we would like to inform you of a few things you need to keep in mind in order to make a safe investment using the Onebot scores. First of all, please fully understand how to read and interpret the Onebot chart and the signal. Second, study whether you should wait and see after the signal is appeared, and if so, at what price will you enter or exit positions. We also recommend that you get into the habit of always setting a loss limit. Lastly, learn all of the signals that we mentioned in this video and invest with a small amount of seed money until you achieve high win rates. So in this video, we learned about the most basic Onebot score manual. Next, we will prepare a video that can give you a more detailed and in-depth explanation while analyzing actual cases for each signal. Thank you for watching, and we hope you make safe and successful investment.